Now, as I told you that examiner test whatever going on in this current world. Same with SBR and SBL, both papers, right? So, there is a, if you see news, if you guys are active, there is a word startups. Startups are in fashion now, especially in India, in US, everywhere. India, especially in India, right? And there are a lot of shows related to these startups as well now, right? And there are big banks also are investing. If you have heard about, there is a bank, SoftBank, the his owner Masayoshi Son. If you guys study, if you guys read the novel, read the current magazines and all, so this guy Masayoshi Son invest in a lot of startups. He invested in that WeWork, and he opened a vision fund of around 100 plus billion dollars, 100 plus billion dollars, in which Saudi king also invested 45 billion dollars. So this was just a history. So nowadays it's very common. Startups arrange fundings from common people as well, common people as well, because now this is the time of internet technological age, so you can easily take fundings from crowd as well, right? Okay, so this crowdfunding is a very very common phenomenon nowadays. And as we are accountants, so we have to write the accounting treatments. Now wait, I'm sure you are aware of IS 8. Wait, for example, in your company IFRS is being applied. You follow IFRS, okay? But IFRS, the IFRS, the first word I means international. So IFRS cannot cover each and every transaction of the world. This is a physical limitation. So what happens if a new transaction comes in your company? If a new transaction comes in your company, what we do? Listen, these words you have to write in SBR paper a lot. Many times examiner even writes. If a new transaction comes in front of you, so first of all, you have to open the IFRS book. If luckily you find the treatment of that transaction in IFRS book, if you find the treatment of that transaction in IFRS book, just simply apply it. For example, that transaction is covered by IS 37 or IS 38 or IFRS 9, just tuck do it. But if that transaction is not covered in any IFRS, then you should go for similar transaction with that transaction. And if there is no similar transaction, then use framework knowledge, then use conceptual framework knowledge, or we call it make your own accounting policy. That is the flexibility of IFRS. Okay, so now this, when you as a startup owner, when you receive funding from the crowd, so what accounting entry you have to make? So now look at here, you can make 3 entries. See, first of all, definitely that's the other party, the opposite party is giving you cash. So you will debit the cash, and now three things you may credit. The first thing is liability. The second thing is equity, and the third thing you can credit is income. Cash, debit, and on the credit side, three things you can credit. The first thing is loan, liability. The second thing is equity, and the third thing is income, right? Now, depending on the case to case, that you have to acquire the treatment. Now, you always need to think, before deciding the accounting treatment, of crowdfunding, you should think about these things. What return crowd is getting. For example, you have to give them a fixed return. And you are bound, you have signed a paper that you will be giving a fixed return every year. So it's like interest, and you have contractual obligation to deliver cash in future. So in that case, it's a loan, right? But for example, you haven't promised anything. You said, okay, We will decide from the profits, we will give you something. From the profits, we will give you something. So if it is like ordinary dividend thing, then this is a sort of equity thing. This is a sort of equity thing. Okay, this is all judgmental based things, which you need to discuss. Now, do they have the right? Means public, crowd. Do they have the right to get their money back? Okay, if they have right to get the money back, that means you have contractual obligation to deliver cash, then it's a liability. Then, are crowd owner of our business? Yes, sometimes in startups, sometimes you sell your equity stake, sometimes you give equity stake to another party. Yes, be my partner. So in that case, obviously you have to credit equity. Now, the first thing, crowdfunding could be debt. If the money received have to be repaid. If the money received, I'm sure you can read it. I am sure you can read it. If the money received have to be repaid, then there is a contractual obligation to deliver cash. Yes, if there is a contractual obligation to deliver cash, then simply apply IFRS 9. It's a debt, it's an obligation. Okay, now what IFRS 9 says, you know this. IFRS 9 should be applied and the liability should be initially recorded at fair value less issue cost. Fair value less issue cost, that means net proceeds. That means net proceeds. Okay, default accounting treatment is amortized cost accounting. You all better know this. Please recall your concept. For I'm not talking about financial assets. Please, students, quick recap. I'm not talking about financial asset. I am talking about financial liability. In financial liabilities, there are two heads. Remember, one is amortized cost accounting and second is fair value through P&L. Fair value option is also there. For financial liability, there are two options. One is amortized cost and second is fair value through P&L. Normally, the default category for financial liabilities is amortized cost. Okay, yes, fair value option in financial liabilities sometime recognized when there is a derivative nature liability. Okay, right, and there are certain more conditions. Now, the second point. Now, dear student, the second point. Crowdfunding could be equity. If the monies that have been received represent an ownership interest. If you have given the ownership interest, okay, like you have given them decision making authority, such things, then again IFRS 9 will be applied. Yes, for equity, liability and equity both are dealt with IFRS 9. It is also initially recorded at fair value less issue cost. I'm sure you have studied IFRS 9, the financial instrument standard. Whenever you issue shares, listen, equity means, in simple words, if I talk related to stock market, if I compare it with the stock market, whenever you issue equity shares, so definitely in the issue of shares, if there is issue cost, you need to net off. And you need to book net amount in the equity. Okay, then crowdfunding could be revenue. Yes, if you have sometimes to generate your funds, you sell your own things, you sell some of your assets. So in that case, for future, look at me, for future, you don't have to give them any equity interest, you don't have to repay anything in future. So in that case, it's your revenue. See, cash debit, remember the entry which I showed you? It was debit cash and credit three things, three out: equity, loan, or revenue. So just think, you don't have to pay back anything, so there is no loan. You are not giving equity interest to them. So in this case, you are just selling them some of your own assets, and in future now you are not going to see their faces. Just bye bye. So in that case, just book the revenue. It is possible monies have been received because the company is making a sale. In this case, revenue will be booked when see again, revenue will be booked when performance obligation is satisfied. Very, very famous line. Very famous line according to IFRS 15. Very famous line according to IFRS 15. Very famous line according to IFRS 15. Okay. Yes. Very famous line according to IFRS 15. Now, these things examiner may ask in current issue, or 6 marks, 8 marks requirement they may ask. So you have a little touch up of these things. Current SBR paper, there are, it's like huge game, huge game. So there are many things you must have little knowledge of many things so that you can elaborate.